topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning. It's another great Monday to be here talking about taxes. And, being here on Tax Talk for You allows us to give and bring a lot of information about taxes to help you, whether it's in business, whether you are a W-2 employee, whatever it may be. It's about helping with taxes, helping to reduce your tax burden, maybe also help you with your bookkeeping so that you can use bookkeeping to find ways to reduce your tax burden as well. We've had a busy couple of weeks. Here we start out January kind of behind the eight ball because it's like the quadruple witching hours of deadlines. This month you've got, of course, your estimated tax deadline. You've got to make your estimated taxes. That was back on January 15th. And then, we've got payroll tax deadlines, your 941s, your 940s, your W-2s. And then we also have the deadline to get 1099s out, all in 1 month. Now, if you're doing 1099s, this means you've got to have everything caught up for the whole year in your bookkeeping or be tracking your payments going out to your contractors and know that you have it right so that by January 31st, you can issue your 1099s. Payroll to us, if we're dealing with payroll for our clients, is a little bit easier because we've been tracking payroll for your employees every single pay period. And so our system will come in and generate it. We just go through and verify it. So it makes payroll a little bit easier than doing 1099s for our clients. Now, if you were doing payroll on your own and you weren't using a payroll software, you may have a little bit more complications in going through and doing that and generating W-2s. So, something you've got to be aware of to making sure that, hey, you can dot your I's, cross your T's, and get these forms all filed. Much as this is a great month, we've also started building additional offices. And it's something that we're working on slowly because we're doing it ourselves. So, the fun part is we've got now the structure built. Now we're working to get the interior built. So this is going to be kind of a little bit of fun. We always talk about do it yourself. We've already had to call somebody in to help with the electrical. We've have a little bit of it done, but we wanted to make sure that we got it right. We don't want to burn the building down because, hey, I know taxes. And I do know a little bit about doing some construction because we work around the ranch all the time, building things. Electrical is not something I can totally get into, but hey, we've done a little bit of it. Now we're bringing in an electrician to either fix it, make it right, or say, we've done it right and we can get power to the building. That's a whole other story. And today we're talking about taxes. Taxes. There's a common thing out there that says there's only two sure things in life, and that's death and taxes. Unfortunately, taxes hit you while you're alive. Taxes could hit you while you're dead. But hey, what we're here to do is help you figure out ways to avoid paying as much in taxes. And today we're talking about small business, and we're talking about trucking companies out there. Truckers, as a trucker, owner, operator out there, you have different kind of taxes, different kind of deductions than many other small businesses. Now, a lot of the stuff we're going to talk about for you as an owner operator, as a small business, is going to apply to small business people. And then we'll talk about the special things that apply towards, trucking and owner operators and things like that are going to apply just to you as well. So, unfortunately, company drivers, if you're a company driver, you're a W-2 driver, you don't get all the deductions that used to be there back before the Trump tax laws went into effect back in 2017. Your taxes are typically withheld automatically from your paycheck, and you can't deduct job-related expenses on your federal return. Now, that being said, if your employer was pretty smart, they started paying you per diems, which, if they were doing that, lowered your W-2 pay, which lowered your taxable income, which benefited you for taxes, but didn't necessarily benefit you for maybe going and getting a mortgage, paying in for Social Security and how much you're going to get in Social Security. So there's some drawbacks out there, but it did save you quite a bit in taxes. That money that came to you via per diem on a W-2, you didn't pay Social Security and Medicare on it. So that saved you 7.25%. You didn't pay federal income tax on it. So that saved you whatever your tax rate is. So there were some benefits. Now, if you're an owner operator, you're considered to be a contractor. You're considered 1099. You're classified as self-employed. You must manage your own tax payments. You're required to pay self-employment tax, that 15.3% for Social Security and Medicare, and make quarterly estimated tax payments if you expect to owe more than $1,000. Now, when we do quarterly estimated taxes, a lot of times we base that off of the prior year's return. But if income is down, then we can go back and base it off of actual, not off of the prior year. So, we kind of have to look at that as well. Now, the beautiful part about being self-employed, one, you're working for yourself. You dictate when you work, when you don't work. Now, I'll be honest, if you're not self-driven, if you don't want to pursue income and money and work really hard and you can't push yourself, don't become self-employed. Don't become an owner operator. If you are driven to go after meeting your goals or income needs and stuff like that, and you're self-driven, because as an owner operator, the only person that pushes you is yourself. Well, okay, maybe your wife, but is yourself. As a W-2 employee, you have a boss that demands or mandates that you're going to be there and work these many days, and you're going to do this and you're going to do that. Now, when you're self-employed, you're your own boss. It means you've got to push and mandate. You do the things you need to do to generate the kind of revenues that you need to support yourself, your family, support the business as well. So you're going to take all your deductions. Now, you're going to use vehicle expenses. Now, as an owner operator, for your semi-truck, your tractor, your trailer, you're going to use the actual expense method, not the standard mile, because semi-trucks are considered qualified non-personal use vehicles. So you get the deductions of fuel, oil, tires, maintenance, maybe your truck lease payments, depending on whether it's a capital or operating lease, loan interest. you might be able to. Now, if you're buying the truck and purchasing the truck, you'd be able to take Section 179, which is going to allow immediate deduction of the full cost of the qualifying truck in the year of purchase. So there's some benefits here. Now, if yours is an operating lease, means you're just going to deduct your lease payments. Means you're not going to get ownership of that truck at the end of the lease. You just return it. Okay. Capital lease means there's a small buyout at the end of the lease, and you could own the truck at the end of it if you pay the small buyout at the end. So let's say $1, $1,000, something less than what the residual fair market value would be on that truck would make that an operating lease, and you'd be able to take depreciation, maybe even Section 179. And then you got to figure out what kind of loan interest is in that operating lease as well. So you kind of got to read your leases. You got to look at it and know exactly what you are signing and what kind of lease it is, so that you know how to record it on your taxes. And that's the benefit of, hey, maybe having an operating lease versus a capital lease versus purchasing the truck outright. And when you purchase the truck outright, then you know for sure you're going to be able to do depreciation, whether it's Section 179 or bonus depreciation. All these things will come into play based on the type of equipment that you just bought. And you could buy other equipment. Hey, we're going to take a quick break here. When we come back, we're going to continue talking about type of deductions and everything else. And we're going to touch back on read. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, we ended that first section talking about read. When they talk about business and you're establishing a place for business, they talk about location. Location is extremely important. When I talk about the trucking industry and the truckers out there, I talk about read. Now, it doesn't mean read for education or continuing education or anything like that. What I mean is, you're buying a piece of equipment. You're spending $60, $70, $80, $100, $200,000 on a semi, and you just go in and sign. Well, read the document. There are so many truckers that have signed purchase agreements, leases, financing deals, but never really read the agreement. They didn't have any clue what they signed. Now, my dad taught me is, hey, before you sign anything, you should be reading it. I know, hey, credit cards, you stand there, you just sign. You do these things, it just signs. It just says, hey, that you're responsible for the payment regardless of, whatever happens. And, you got to pay the credit card company and so forth. But when it comes to leasing a piece of equipment, look at not just what the payment's going to be, but how long the payment is going to be. ask them, how much would it be if I paid cash for this vehicle? Maybe you can get a better loan from the bank than you can, doing a operating lease or a capital lease. Maybe you're going to get a better deal. Instead of financing with the trucking company that's selling you the piece of equipment, maybe you're financing with somebody else because it could be cheaper. Look at the interest rates. I've seen ridiculous interest rates charged on semis and trailers that people never, ever actually read. Well, I just saw what the payment was and it was fine. It was 84 months or whatever the time period was, 60 months. Sometimes it doesn't make sense. So I always tell people, whatever you do, read your agreement. If you're going to be leasing for somebody you're signing on with, read the agreement, know and understand that these guys have potentially repossessed trucks from drivers and are reselling them to somebody else because why? You're leased on. And all of a sudden the loads stop in that final year of your lease and you can't afford the truck and they take it back from you. So we hear these stories and we hear these things that have happened to people. You don't want it to happen to you. So make sure whatever you're signing, you're very, very much aware of so that you don't get in trouble towards the end of the lease. Now, just like any other business, you're going to be looking to deduct job costs. And that may be job-specific gear, such as safety equipment, steel-toed boots, gloves, tools, CDL licensing. Those kind of things are all going to be deductible for you as a business owner. Other common deductible business expenses that you can claim as an owner-operator: insurance premiums. You can write off the expense for insurance premiums related to your business. No, it doesn't mean your homeowner's insurance. It means insurance for your business, liability insurance, coverage on your truck, accident, commercial liability, property damage insurance, business interruption, loss of cargo insurance. All these are deductible expenses for your business. Now, if you cover the cost of your own health insurance, you can still deduct it from your taxes, but it's not considered a business expense. Instead, there's a designated section on your tax return to claim deductions for health insurance premiums from those self-employed. Now, maybe you're set up as an S corp and you hire your wife, who's not an owner in the business, and you offer her compensation because she's doing work in the business for you. You might be able to have some employee benefits to be able to pay for those kind of things. Those are some ways of possibly looking at making health insurance deductible. But remember, if you hire other people besides family, besides your wife, you have to offer them the same benefits as you were to give her working in your business. So if you happen to hire another driver, W-2, and you're giving those kind of employee benefits, those employee benefits have to also go to the other drivers as well that are W-2. Association dues. So if you're a member of Owner Operator Independent Drivers Association, or maybe the Texas Trucking Association, or maybe Arizona Trucking Association, or Florida's, whatever state you may be in, if you belong to any of those associations, those dues are all deductible. So those membership fees, if you're belonging to a union, you can deduct them. Trucking association, the group needs to be directly related to truck driving or the trucking industry. These memberships, hey, they're really nice and really good, especially OOIDA. So if you're a member there, you're getting professional guidance, training, networking opportunities, industry information, if there's such things as Landline Magazine. By the way, I do write for Landline Magazine, Trucking and Taxes. So make sure when you pick up the latest edition, you see our article in there on trucking and taxes. So you want to make sure that, hey, you're tracking those expenses as minimal as some of them may be. You definitely want to get all the deductions you can. Your cell phone. Somebody asked me the other day, can I deduct my cell phone? Yes, for the business use portion. So if you have a separate line that you use just for your trucking business, you can deduct the entire cost of the plan. However, if you've got a plan that's both personal and business, you'll need to figure out the percentage of time you use it for each purpose and then deduct the work-related portion. Same with if you're on a plan, maybe husband, wife, children, and everything are all on one plan, it may not all be 100% deductible, just the portion that's used for business. So, maybe you're using your portion of the plan 75-25, so 75% of your portion of that is deductible and 25 is not. Maybe your wife is working in the business and you're calling her for business, then you can deduct the portion of her line as well, what she's using for business to help you in the business. The same thing, if you have a kid, maybe you put them on W-2, and because they have a lower tax rate than you do, it may be saving you money. And if they're working in the business and you're calling them for business, then a portion of their plan, or they're making phone calls out for business, then the portion of their plan is used also for business. So we maybe, in our business, we have family that does work here, and our daughter does some social media and other marketing stuff for us. And within that, she's using her cell phone for a lot of marketing, as well as computers and Wi-Fi and other things that she has that's available to her. So she's able to deduct her portion of her cell phone, or we are able to through the business because she's an employee, and we reimburse for those expenses. So you can use some of that as well. So, other things to look at is other personal electronic devices. So like your cell phone, you can deduct the full cost of any laptop, tablet, or other electronic device you use only for work. But however, if you're using it both business and personal, you can only deduct the portion of that that is related to work. So if you get a new tablet and you're using it both business and personal, then it's only portion deductible that you're using for business. If you got navigation apps, dispatch software, industry-related technology tools, those can also be included in those deductions. And this goes for most small businesses. If you're using your personal electronic devices for both business and personal, you can deduct the business use portion of that equipment. Now, if you buy it through the business and you're using it 100% for business, hey, take the full deduction that you have available to you. A lot of information. Hey, good thing that we're on iHeart. You can listen to the podcast anytime you want. You can go back and find us at our iHeart, or you can find us on any other podcast hosting site out there like Spotify. Just look for Tax Talk for You, taxtalk4u.com, and that's Tax Talk, the number 4, letter U.com. Hey, we're going to take a quick break, and we're going to come back talking about more tax deductions for your business and truckers. We'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing. But that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Speaking of experts, we talk about education and training in Trucker Tax Tools. If you go to truckertaxtools.com or call them at 877-966-2477. Again, 877-966-2477. Trucker Tax Tools were the experts in the trucking industry for bookkeeping and taxes. Matter of fact, we have some fantastic rates. So if you're listening to this show or catching one of the podcasts, hey, our rates for truckers start as low as $25 a week. I've seen other ads out there where people are at $200 a month. Hey, $25 a week, man, you can't beat it. That's just a little over $100 a month for great bookkeeping and taxes for you and your business out there as a trucker. And we maintain our education and training. And guess what? Education and training, even in the trucking industry or small business or any business out there, you can deduct the cost of that training, continuing education. Maybe it's getting your hazmat endorsement. You can deduct expenses for truck driver schools, maintaining your CDL, especially if you paid it out of pocket. Now, somebody else is paying it for you. It's not a deduction. Matter of fact, probably you're an employee, not a W or contractor or self-employed trucker, or not an owner operator. Any other education may be tax deductible as long as it's directly related to the business or trucking career. And that includes business courses. Learn more about how to conduct business as a trucker. OIDA always offers a Truck to Success seminar. And if you were attending that seminar to learn more about the trucking business, guess what? That is deductible as well. So as a self-employed person, this might include business courses to help you learn to better manage your small business and business expenses as well. So investing in your skills by education and training, it could lead to better opportunities for you and maybe higher earnings, maybe finding ways to get specialized, whether it's hazardous materials to enhance your value, or learning how to be able to get your own authority and run more trucks and not have to be leased on, but to be able to operate your own trucking entity without being dependent on somebody else. Now, meal expenses. And this is a great question that people ask us all the time is, what do I get for meal expenses? So you can deduct meal expenses if you're away from home long enough to need a break or sleep or rest. So carriers that travel regionally or long haul truckers, you qualify. And if you're doing things locally, you probably don't. So if you're returning home every night, you're not going to qualify. Drivers that are subject to hours of service regulations, you get to claim 80% of meal expenses purchased on the road. Now, that being said, you do have two options as a owner operator, long haul over the road trucker. You can keep your receipts, keep all your meal expenses, and claim your actual meal expenses, including tax and tips, just like all other small businesses. Or you as an owner operator can use the per diem allowance. Now, the per diem allowance is a daily non-taxable reimbursement permitted by the federal government to cover meals and incidental travel expenses. Now, per diem is calculated in centers by day. So you get $80 a day well away from home. Now, the first day and the last day are only considered $40 days, considered half days. So if you actually calculate it, the first day that you leave is a whole day and the day you come home is not a day, then you can actually calculate your days and nights away from home correctly. And then you get that $80 and only 80% of that's tax deductible. So when we're figuring out taxes, if you were away for, enough days and you take these deductions, now I'm going to tell you 99.9% of the drivers are going to take that $80 a day because most of them aren't spending more than $80 a day while on the road. So we're always looking at what's the best. Now, if you are local and you're driving local, you're not going to get per diems. You're not going to get meals unless you are going out with a client or taking out a prospect. Maybe you have a prospect of employee that you might be hiring and you take them out for lunch or something, deductible. If you're going out and discussing business, maybe with your significant other, you would be able to deduct business related expenses for meals. Maybe you're trying to find somebody to help and you're doing marketing. You're taking somebody out to kind of grease the palms, as they say, to get in good with some company to be able to haul more of their loads. Those meals would be deductible. So you would be able to take the meal expense. Now, they'd only be 50% deductible, but it's better than nothing out there. So if you have certain conditions placed on you for employment or as an owner operator or small business, such as medical expenses, drivers are sometimes more than likely required to get regular medical exams. You can deduct the out-of-pocket costs for these required exams. However, if the medical exams or treatments are not specifically related to your job, it can only be deducted as a personal expense over on Schedule A, subject to the minimums over there. So you have to be aware of what is deductible or what is not. Hey, just a regular checkup, going to the doctor is not going to be deductible. Going there for your DOT physical is a deductible expense. If they require you to do a couple other things for driving, those appointments may be deductible as well. So, keep those things in mind. We're always looking for every single deduction that you can take as an owner operator or as a small business person. We always get, hey, is my clothing deductible? Well, specialized clothing or safety gear required for your job, for your career, your company, maybe a company logo shirt, maybe back brace, the steel-toed boots, the safety goggles, those all can be tax deductible. However, regular everyday clothing does not qualify, even if you wear it while you're going to be driving. Okay, so if you can basically go out and wear it anywhere else that doesn't have your logo on it, or you can wear it to church or whatever, hey, that's not going to be everyday deductible. Okay. If you're going to be training and going to industry events or training sessions that are going to require something specific, you can include those costs in your deductions. but you got to make sure you're keeping track of it, keep the receipts, put notations on there why this is required so that you can have the deductions. So maybe if you go through and you buy some shirts with your company logo on it, and usually we're wearing a taxation shirt or a trucker tax tools shirt. Hey, today we're wearing Texas Tech. Hey, guns up. My daughter and my money go there, so we kind of support Texas Tech. This shirt was not deductible for business, but the ones that I have with logos from like Vistaprint or Imprint, for Imprint, whoever we're getting our shirts from, local embroidery shop, those shirts were all deductible for the business. And so we do take those deductions because it does have the logos on it. We don't discourage anybody from wearing our shirts out and about because, hey, it's great advertising for us. We even have T-shirts that we've had done up for drivers when we've been at the truck shows like Mid-American Trucking Show or the Texas Trucking Show, or even the truck show when it was in Dallas, the Great American Trucking Show, or even when we get out to Iowa 80. So hey, we love to have people wearing our gear out there. So all those things are deductible because it is providing advertising for the business as well, marketing. Hey, you as a business, maybe you're paying dispatch fees for your loads. You can claim them as a business expense, but you got to, again, make sure you're keeping track of them and all your invoices and receipts throughout the year. If you're out there driving and you're using a broker and they're taking fees as well, those brokerage fees are also tax deductible. Depends on how you're getting the 1099. If you're getting the 1099 from your broker, then they probably already pulled the fees out of that and you won't get the deduction. So you kind of got to watch your 1099s as well on how they're actually putting it through and what they're including and what they're not including. So you always want to make sure you're on top of it. You can also deduct the cost of state and local government required business licenses. So if you have certain licenses that are required for your business, you can deduct those, as well as the cost of your CDL license and any other licenses to conduct a business. It only makes sense. So even as a self-employed business person, if you're required to have permits or licenses, those are deductible for your business. And that goes for all your permits that you may need. Maybe you're taking wide loads through the city and you need permits to get certain places, or you've got to have additional guidance trucks with you. Those are deductions for your business as well. Hey, we're going to continue talking about business expenses for your trucking and small business after we take this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're in the last segment of the show, but if you got questions, is something deductible or not, hey, shoot them to us. Let us answer those questions here. We may not get to all the different deductions you have. I had Larry here out of Baytown, Texas. Larry, thanks for the question. Are my tools deductible for our business? A toolkit, tools, you need them to do your job safely, effectively, and they are an approved tax deduction. So, whether it's hammers, pliers, wrenches, tire irons, chains, electrical tape, all that's deductible. Things you're going to use to help keep your truck in good repair. that you purchase, whether it's a full tool kit, or simple single tools here and there, take advantage of those deductions. You do get the deductions for that. So that's a good question, and we like questions because we like to be able to give answers out there. So as a self-employed person, you can also deduct things like office expenses. You may have some traditional office expenses running your business, like maybe postage, photocopying, maybe sending faxes, maybe accounting software like Xero, or maybe load board software or other calculators, pens, paper, folders, maybe a little filing cabinet, so to say, or maybe a crate that you have in the truck out there. All those kind of things are expensible, and the expenses for the business. So it's the same as any other self-employed. I mean, if you've got office expenses, those are deductible. Maybe you're paying rent. So maybe you're not just running the only truck, but you have other drivers running with you, and you have a office set up for it that you're paying rent on. That is deductible. You got a home office that is used exclusively for business. You can take the home office deduction based on the number of square feet you have in the home. Now, most of the time, we're going to use a safe harbor method. Occasionally, we'll use the actual expense method, depending on what you got going on there. Now, using the home office, they're just deducting the portion of the square footage. Now, if you buy furniture and equipment for that office, that furniture and equipment belongs to the business and is depreciated and then deducted. So you'll be able to do that as well. Running a business, sometimes you subscribe to magazines or certain websites that focus on your business, like the trucking industry. You get to deduct those costs of those subscriptions. Other subscriptions, maybe you're using GPS subscription. Those things are all deductible. Other subscriptions you're using for business out there. So maybe you're using YouTube to do educational videos and stay up to date on different things that are going on. Or you're using subscription to like the Weather Channel to stay abreast of the weather that's out there, or other subscriptions that you're using on your phone that you don't think about. Those are going to be related to business. And if they're related to business, they become deductible. Wow, lots of expenses in this business. And, sometimes people ask, how do I make ends meet? Hey, you work your tail off to make as much money as possible and then save as much as possible. But you take advantage of all the expenses that you're going to pay anyway. And if they are related to business, it's finding it as a deduction to reduce the taxes. You don't want to pay for expenses like occupational or excise taxes with after-tax dollars, money that you're not taking the deduction. You want it to be pre-tax so that you can save money on taxes. So if you're paying occupational and excise taxes all throughout the year, if the taxes, heavy truck taxes, $22.90, keep track of those and showing what you paid and what the taxes were. So the other thing is hey, as a trucker, you have a sleeper berth and you get expenses for that. So you can claim expenses associated with setting up your sleeper berth, since they're considered necessary for working on the road. These could be mini fridge, coffee maker, curtains, bedding, food storage containers, even first aid supplies, fire extinguishers. All these things are deductible. Things you're using to set up your sleeper berth that you need to make it to where you can use it, sheets and so forth, are all deductible for the business. I've seen it at the truck shows, really nice mattresses for your sleeper berth. You purchase one of those, get the tax deduction. Take advantage of it. Last thing we're going to talk about is truck repairs and maintenance. Since your truck is considered a qualified non-personal use vehicle, you can deduct 100% of all vehicle expenses, such for truck and maintenance, including tires, vehicle washes, other vehicle expenses, oil changes, things like that are all going to be deductible. Now, where you got to watch is how to deduct repairs for your truck. Because if the repairs improve the truck, the useful life of the truck, they become capitalized expenses that need to be depreciated. Maybe replacing the engine, transmission. Those things are huge expenses that become capitalizable and depreciable over their useful life. So you need to watch what expenses are out there for you and your business so that you know how to make those deductions so that you can save money on your taxes and actually do your taxes right. Now, what's non-deductible? Every business has some non-deductible expenses, but there are expenses out here that are for truckers that is particularly non-deductible. Commuting. You can't take mileage on your personal vehicle for drives between home and the location where you regularly start or end your trips. Wherever your truck is parked near your house and you drive over there, that is not deductible. But if you take your personal vehicle, go into the store to buy equipment, to buy supplies for the truck, that mileage from your personal vehicle is deductible, but not commuting. Local route meals. You can't deduct your daily meals when driving local routes in your home area. You're not away from home every night. You're able to return home. Those are not deductible. Again, everyday clothing. Even if you wear it exclusively while driving your truck, you can't deduct everyday clothing such as jeans and t-shirts. Personal trips. You can't deduct expenses for a personal trip. Even if you're using your business vehicle, you must be actively working for tax deductions for this to apply. If you're having business meetings, those are. Those are kind of things that you need to look at that are not deductible. Reimbursed expenses. If somebody else, such as a carrier you're contracted with, pays you back for your expenses, you can't claim them on your taxes. Now, if you're claiming the revenue side that the money came in, then you can put the expenses down there at the bottom. So you kind of got to watch how they're going to do their 1099. So, we tell you, hey, be diligent about keeping track of your expenses. Maintain a dedicated folder or a physical or a digital folder to store your receipts, your invoices, and other tax-related documents throughout the year. Sometimes taking a picture and putting it into a folder on your phone will help you. Things like that, but you got to make it a habit to keep things up to date regularly. It's best to call Trucker Tax Tools at 877-966-2477 and get your bookkeeping done and your taxes done so that, hey, you can be fully aware of it. Hey, get somebody to help you keep track of your records. The show always goes fast. And all I can tell you is, hey, sometimes we're talking a little bit faster. Hey, go back and get the podcast. Go to taxtalk4u.com. You can see all of our podcasts up there. You can go in there and do a search for trucking and taxes, and you can find all the information you need to help run your business and reduce your tax burden to the lowest amount allowed by law. Or better yet, call truckertaxtools.com. At 877-966-2477 will help take care of you. Hey, most important thing for you as a trucker, as a small business person, even as a W-2 employee looking to reduce taxes, be here every Monday at 10 a.m. Eastern Time on Tax Talk for You on W4CY Radio. And as always, we tell you to have a God-blessed and glorious week. Enjoy what you do, but go out there and do it the best you can be the best employer, best self-employed, best owner-operator that they've ever seen. Have a great week, and we'll see you next week, 10 a.m. Eastern Time, right here on Tax Talk for you. See you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.